Alright boys, hope everyone's well. Yeah, so retail sales just came out, and Hassan, you're asking, yeah, it is from the Obsession Movement. You're asking about whether this selling here is on the back of retail sales. Not really. That retail sales number is actually a European-wide number, and what that means is that it's it's already sort of half produced in the background. What I mean by that is that we get the retail sales Germany, Europe, France, Italy, and Spain. You can sort of see what that number is going to be anyway. That's why it's always registered as low impact, and the number came in as expected. So what's the selling off? This is just a new low, so some stocks got hit, and immediate retracement is suggestive that there are buyers lurking, and there should be buyers lurking all the way down to 113. Stops below 113. If the market can grind down there, and there has been some grinding against the US dollar US dollar strength in the past couple of hours here, then yeah, it can happen. It's been a bit of US dollar strength all week actually, off a very low sort of US dollar base at the start of the week, and where we were on Friday. Okay, in that sense, what we're dealing with here is that we're dealing with a market that's probably repositioning into the NFP, and probably a little bit overdone in terms of US dollar weakness, given that US is actually raising rates as well, and the yields have had a really fantastic week this week in the US. So US yields have a really nice week, and this has led to the dollar-yen strength, and the dollar-yen strength's been able to overcome some hurdles. So it's actually stronger than it looks here, because it's been able to overcome some of the hurdles in the form of North Korean issues, and also having a day off during US holidays, and just generally people trying to sell the US dollar by the euro. So it's done remarkably well, and so it's a little bit challenging here. If dollar yen wants to go higher, it is actually very hard for gold to go up, and it's not like this is the first time that we've seen North Korean issues, and there's never really been military action as a result, just more talk. And there's another talk going on today at the UN Security Council in New York, so perhaps you'll get another resolution. The interesting thing that can happen today though is that if China vetoes or Russia vetoes a strong sort of sanctioning of North Korea at this point, in a means to try and tame the situation and try to get it through their back channels, then the US might take its gloves off. Now, what do I mean by that? I mean, there was a bit of a deal done with Trump and the president of China a couple of months ago, whereas Trump said, we're not going to push you on trade issues if you take care of North Korea. Now, if it comes to the stage where US feels either China cannot or is not willing to put pressure on North Korea, more pressure, and stop the development of these missiles or missile tests and nuclear development, then perhaps they don't need to stop on. They can renege on the deal of letting China have a free pass on the trade front, and then start going after China on the trade front, which is a big part of Trump's agenda, which is rebalancing global economy in America's favor a little bit trade-wise. And there's a lot of Chinese sort of advantages at the moment that he could take issue with in a lot of sectors. But the first things first, what he could do is he could put sanctions on Chinese banks that do, or Chinese companies that do business with North Korea. And China is not the sort of country which will respond, with a shrug of the shoulders in that scenario, right? So that's the danger. They got many ways to retaliate, and that's how a trade war sort of begins. Geopolitically, something else, and then you got an excuse to do something, which America does all the time, and then they could it could become a full-fledged trade war. So while this gold trade may not work, and the timing may be off, and the market's still responding to yields going high around the world and pushing gold down, which is what happens if that's happening, the potential for extreme risk off from another front is growing, which is a confrontation between America and China. Where can it start to brew? this weekend with the G20. All right, so NFP is a monthly thing, and we all know about it, and it affects, you know, the U.S. economy and stuff. But the backdrop of growing tensions and trade wars, and the market sort of seeing how U.S. is going to try and push people around, or what sort of world they want to create for them, is a scenario here where it could get more serious very quickly. Yeah, and when we have no, not forget about the news, but learn what news is important. Yeah, that's the issue here, and that just takes a little bit of time. But if you're looking at something like Forex Factory, the color codes are usually pretty good. So when you're looking at Forex Factory, you can see the color codes here. Yeah, and so in that scenario, you probably, you know, in terms of data wise, you want to be looking at something like the FOMC minutes tomorrow morning are important. Okay, very important, because last meeting they raised rates. Okay, so we have to see what their intentions are going forward. And tomorrow's ADP employment is very important. The ICM non-manufacturing, which is PMI in the US, which is service PMI, is important. Crude oil entries tomorrow is important. And then the next big thing is NFP, and that's the most important thing each month almost. So, you know, that story is really, that's the only things that you can sort of look to move the market, you know, considerably. Today we had the PMI come out from the UK, slightly lower. Literally, you wouldn't have seen much action at all. At this time, the US was pretty strong, and you know, the pounds just tested 129. It's held a little bit now, and we're seeing the pushback. This is an important couple hours here in the market. What happens here in the euro? What happens here in the pound? Even in dollar yen, if it wants to roll over, but it's not really the dollar yen in play. But also Aussie and the CAD. The CAD's been crazy strong, so it's been dollar CAD's plunged new lows overnight, and you know, but it's a bit extended, right? So you could see some pushback on the CAD just technically, but it's looking really good to keep on going down too, as oil's been pretty strong. But what's happened with oil? Oil's also had a sudden little plunge here. I can't find any news out regarding that either. The deadline's come and gone with Qatar, and nothing really's happened there. So we're having a little bit, you know, there's some of the reasons for buying gold, have been negated by lack of market reaction. And that's something to do, right? If you buy something like gold expecting the market to buy it in anticipation of you know, some sort of negative reaction in the stock market and fear raising around the world because of Qatar or because of North Korea, then the reaction here, the price action so far has been so muted and so weak, that rally getting reversed in Asia, that this is actually a good time to close right now, because it's unlikely that new information is going to change this dramatically in the next couple hours. So the stops underneath 19 are very much vulnerable here, and while, you know, tomorrow, well, you know, what the fallout is of the UN Security Council could be important, that's a slow burn topic, not a fast burn topic. So yeah, gold is actually looking pretty weak here for the next leg lower. Got the stops from the previous low in May as well. It can get taken out. In this particular case, I'm going to close. Yeah, I'm going to close. I can't just talk to you about price action being weak and not react to it. That's about as weak as I can sort of. This is not what I signed up for in that trade, yeah. So I can always buy again later, yeah, if the situation changes. But right now, the market looks like it's hunting stops, and it's probably going to take them. It's not a sort of game where, oh, it will be alright. We'll just see what happens next. If you can see something happening, and the change is to even 50-50, you take your capital out. You don't put your capital to work at 50-50. You know, that's not the trade that you entered. You entered at 70-30. You wait again. You save what money you have, right? And then your capital, then you put it back to work at a 70-30 scenario. And that's being extremely ruthless like that is really important if you want to make money over the long term. just, you know, think of it as one long trade in a series. All right, so that's my little opening rant. Give you a little bit of that. We should get more volatility today because of overnight being a holiday, and now the first sort of day for the US stocks to react. But US stocks have been so stable in the futures market, you can't expect there to be much selling coming through later. Yeah, and this is like literally the 11th missile that North Korea's fired this year. While it's a bigger one, and it was on July 4th, if the market was going to react, it probably would have done so by now. Yeah, part of that's potentially the case, right? Oh, that's a big negative story. Stock's definitely going to push fresh highs. It's a pretty crazy world in the stock market right now. If I was trying to sell it still, and there's been periods where I've been thinking about selling stocks, actually selling stocks as well, and it's just hasn't worked out for so long. It's so hard to do. You know, you just got to be able to, in this scenario, just react to, you know, just accept that the buyers are in control. Eventually this will end, but you know, you can go broke much quicker than the market can stay insane, to paraphrase the saying. Alright, let's have a look at some of the research that's come out. Don't want to miss anything, so we'll have a look at the sales macro daily. This is just a wrap up of all the news that's come out in the last 24 hours. This is wrong. It did not strengthen. Excuse me, that is... Who wrote that? Well, they climbed in Asia, but then they just turned down, right? And they did sort of respond to Kim's little rant about how good he was, but, you know, that's nothing. Qatar's little side move here has been to increase its production of natural gas, and it's one of the biggest producers in the world. Natural gas has fallen a lot in recent years. The way Saudi Arabia responds to Qatar saying no to the demands, that is, they basically said we will respond in our own time. So that's going to be another little headline risk coming up. How they go it, if they go nuclear, in terms of putting more sanctions on individuals and, you know, starting demanding from other countries that buy oil from Saudi Arabia that they blacklist Qatar as well. That would lead to some negativity for sure. Any sort of talk here about central banks' inflation target shouldn't be applied too narrowly. Be flexible is a bullish, hawkish stance, because the low inflation is the thing that's stopping central banks around the world. So there has been some talk that the 2% targets that a lot of central banks go for are too high in the current market. Therefore, 1% is okay for still be raising rates in. So you can see that any talk like this is actually hawkish talk, especially if it develops into from a central bank governor. If Yellen said it, the market would go berserk. EU-Japan free trade deal, I didn't know about that. Europe's sort of taking up the mantle of the free trade champions, especially Merkel. That's where there's going to be tension at this G20. Suggests the primary focus of the G20 meeting will be free trade. Yeah, gold, it probably will troll me now, Potter. Let's have a look at it. One does not simply try to predict the future on a stream. Yeah, you got video proof. Oh god, too much pressure. Too much pressure. There's been much talk about the ECB presidency passing to a German. That would be insane if that happened. Because Germany is much more conservative, like the whole thought processes. Pound's showing a little bit of life off 129 here. Let me find another little piece for us. A little review from HSBC, what you might have missed in 2017 June. So last month, started off with the weak NFP. Pound fell on the hung parliament. Fed raises rates. You know, the Fed reversal was pretty sharp, and the statement started talking about balance sheet reduction in a much more forceful way than we expected. Then there was that surprise with MPC with the BOE 5.3. Try to get into much. Opens ECB forum with less double speech, Euro rallies, Carney state summary, BOE stimulus maybe necessary, pound rallies. That's the month in a nutshell. And then the next day obviously had that ECB leak saying you guys misunderstood us. I don't want to go through the review of last month though. We do that pretty well, I think. I don't think we missed too much last month. Every now and again though we do look at the technicals, even though it's not really a technical based stream here. Just making sure that you don't forget where the 200 days are and a few other the key levels. Alright, so the euro euro is well away. Dollar yen's a little bit closer. So this is how fast the euro yen rallied. It's still hitting 800 points above. Euro yen actually hit a fresh cycle high in Asia today. So we've been trying to get a buy on the euro yen. We want to pull back on this pair so we can get into it on the action here. We're going to be patient though, because the target is 130 and we're already so high that hopefully we get 100 to 150 point pullback that we can look for some nice stabilization, then buy for the continuation. It doesn't really matter if it comes from the euro or the dollar yen. But probably if we are going to get past 130, it has to come from the euro, and it has to come from the euro breaking 115. Alright, so the level I was talking to you guys about yesterday is that 113 level. If we get the nice bounce off that, that could be a trigger to buy. And even if we get a break of it, but a quick snap back above it, so a little stop hunt, then back above, that I'll be buying and then putting my stop above that new low that the plunge gets to. So that's if you're not in the euro and you're looking to buy, that's a potential catalyst for you. And just because we haven't looked at it a while, let's have a look at the positioning there. This comes from IG, one of the largest retail brokers out there, and it's actually pretty insightful. I like to read this one. So I haven't looked at this for a while. Jesus, everyone's long gold and silver. Oh, gee. See, if you looked at this, you'd be like, whoa, Jesus, that's why we don't buy. That's why it's so hard for it to pop up. You got no fear, do you, Andrew? You gonna buy this high? I suppose it should be fine. It should be fine. I just like it when it cleans out a little bit, gets a little bit less. It's probably like a 70-30 or 60-40 up here to keep on going up. Whereas if it pops down and sticks around, then it becomes like an 80-20 if the right thing happens. But yeah, no, I can understand why you'd look to buy sooner rather than later. Those large pullbacks are just not coming lately. It's not been two-way action at all. It's just been one-way action. Okay, so these are clients here in IG. So you can see here that majority of them are short. Like literally 90% of their clients are short Wall Street, and they're one of the biggest spread bettors out there. That just tells you how ridiculously wrong the retail market is sometimes. And long gold and silver, you can get away with that a little bit because it's sort of like buying an asset as a hedge. But yeah, no. Now, where's the euro? What was that euro doing? Euro, most people are short still. Okay, so it can easily keep going up. Easily keep going up. Traders have been net short since April, when the euro traded at 105. And the selling in the euro, I mean the pound's still heavily net short too. So yeah, no, it's an interesting scenario there. Just looking at those off the chart. Yeah, I read about that, Potter. Right, I read about that. But we talked about that before. What's the, if he did just an analytical, statistical, that misses things, right? That misses things like some markets positioning are different to others. Like it's like looking at a chart and saying, well, that pullback is the exact same as this pullback. That should happen here, and it doesn't happen. And saying, well, that pullback means nothing. If you can put some color on each of the different scenarios, I think you can gain an edge. So right now the market's heavily short, say something like the Kiwi. Yeah, and we've been seeing that shortness continue pervasively for a long time, and so perhaps that is no longer a sort of contrarian signal anymore that it's going up because it's been short for so long, and it's broken fresh highs a few times, right? But a week, maybe a month ago, when the market's heavily short on this first trip up to 73, it meant a lot more. Now it becomes less and less relevant because there's still stale shorts out there, but it's it's well known. In the same event, if the market remains short the pound at 135, then probably a lot of the clean outs already happened, and you wouldn't be still looking to squeeze at certain levels. I don't know. When I see those researchers statistics look at trading, you know, this to put it into context, those same guys look at the efficient market theory, right? And they say that, you know, there is no edge in trading. Everything price. They literally look at the statistics of it and say the price movements are random. We know that can't be true, right? Given that some traders have an edge that's outrageous, like 95%. So it can't be true in that sense, right? But statistically, it's random in a random walk. But it's there is some sort of madness to it. So yeah, I always be hesitant reading too much into that. Otherwise, I wouldn't have got into trading if I didn't think that there was an edge in it, and we could get situations where the next 100 pips, 200 pips is predictable. Yeah, Aussie does look pretty weak here. Might break down. Actually, Jim Reed's little morning read from Deutsche Bank. Interesting landmark today is what marks 10 years exactly since the last UK rate hike. There's nothing here. Actually, that news that did come out this afternoon was Russia is opposing a large, strongly opposing a large cut for production in the OPEC deal. So if that's the case, then perhaps OPEC's played its hand a little bit. So that's probably why we did see that little bit of selling coming through in the end of Asia, which is not normally the time that you get selling in oil. Always a little bit of a story when there's big moves. Just got to go find them. Alright guys, so yeah, in terms of what my next trade's going to be, I'm going to just sit and wait here, and I'm going to try and get a pullback on something. It could even be Aussie. I don't mind the old Aussie in long. I might build up some longs if we dip back towards, someone saying 75.50, that would be great. 75.80 might hold too. Let's see how it plays out. The sellers don't have too much of a play here. A control of the Aussie, and so unless something changes in terms of dramatically the sentiment, and US dollar can break through some key levels with the euro, then yeah, you got to be careful. So it's like if the Canadian dollar's going lower and Kiwi's still holding, and while Kiwi is also a little bit like the Aussie in terms of its testing some of these levels, it's been really hard to get that sell off in the Kiwi. I've been talking to a few traders who are trying to sell this for literally, you know, over a month now, and the lack of follow through has made them pretty shy into even selling to nice structures like this, because there's been many false dawns. So yeah, we'll see how it plays out this time, but there isn't a catalyst yet. There isn't that catalyst. It's much easier to sell Aussie aggressively. You know, like if you're selling now, you're selling for 50 points, and that's like, if you want to, that's not really what I do as a trader. If you're selling for a break of 75, you need stock markets to go with it. You know, we pretty much established that the yield compression is not a story that can get the market selling too aggressively last week. So let's see, this is probably where the action's going to be here, 75.80 to 75.50. I'll leave a little limit order, probably mix it. I might leave a little limit order at 75.70 with a stop at 75.30 on the Aussie here. I'll post that trade idea up in a little bit. Like, I'm much happier selling the Aussie when we had the stream. Bought a little Aussie on that dip after the RBA, because I thought actually the RBA would come down. I was long Euro Aussie. I cycled out of Euro Aussie longs, so I sold the Aussie and then I bought it back against the US. Cut most of it earlier today, but still got a little bit of Aussie long actually. We'll see how it develops. The good thing about the Aussie, it's not going anywhere too quickly. Yeah, it's a really slow mover. Alright guys, well, good luck with your trades. We'll be back on Friday night, because the next stream we're going to do is on Friday. Usually I don't stream Fridays except for NFP. So we're going to do NFP live, and that's usually the biggest stream of the month. We have, you know, up to 300, 400 people in the room for that, so that should be fun. We'll be focusing on dollar yen again, probably as the way to play. Maybe actually euro this month, because of the movement in the euro will become a better way to play it as well. Depends on where both those currencies are. Expectations are quite low for this NFP number, so a chance for a snapback after 3 months of poor numbers is there from the statistics side of things, but also, you know, the market was looking for a story, and in a 4th month of weak NFP might be the straw that breaks the camel's back in terms of the market pricing out Fed rate hikes this year, and that could lead to the euro breaking that 115 level. Alright guys, good luck with your trades. I'll be in the room. If you need anything, just send me a message.